Data center revenue was up 400%. I don't know. That's
They're
not
going
actually
through the
accurate.
super.
Let me check.
They are going through the super cycle. The growth has been insane, and they have not hit the peak yet. Although I will say one thing I saw was that 20 to 25% of their revenue is coming from China at the moment, and that's going away because of the regulations. So I would be concerned about that. They said it's going to be made up, but look, they are relying on, and I guess we don't necessarily, we may not call it a bubble. You can call it a bubble or a boom, the AI bubble or the AI boom. They're relying on that. And there's a lot of people that are coming after them. Advanced Micro Devices is doing fine. You got the internal stuff from the cloud providers. Look, the fact that the stock went down a little bit on this should show that expectation investing matters.
Everything's priced in.
Yeah, I hope that was coherent, but that's my thought on Nvidia. I don't have anything else. I have nothing about the business. They're doing fantastic, but not my wheelhouse.
Yeah. And just to correct myself, the data center revenue was up 280% year over year.
Weak. Wow, terrible.
It's a pretty insane chart. Just the quarterly revenue.
Almost makes you think it might be unsustainable, Ryan. Almost makes you think. Almost makes you think that. Hey,
Yeah.
is their quarterly revenue next quarter for this quarter, next year for this quarter higher or lower than this one? The expectation right now, I think I saw it in the Wall Street Journal, is for like a double.
In revenue?
Yeah, I think so.
Oof.
That could have been earnings, but either way, their margins are so high right now, it'd be similar.
I don't know. I mean, how much of this is just hinging on like companies building internal chatbots or
Yeah,
like,
or venture capital pouring billions of dollars into the space, which goes to this.
yeah, I worry about, yeah, I do worry about the sustainability here. I think AI long term probably very helpful to a lot of businesses, but I wouldn't be surprised if a lot of companies pulled back on some of the investment kind of in the next year or so.
Well, here's what kind of leads me. Again, we're not experts on AI, so maybe the cost of the stuff will come down, or maybe the returns will be so high. But if Nvidia chips cost so much money, the ROI across the board for the companies buying these chips is going to be so low, and a lot of them will eventually go out of business. So it doesn't seem like sustainable to me.
Yeah, I think that's fair. Okay, well, that's our NVIDIA take. We can throw it in the title. Hopefully people listen. Hope you're hope
Yeah,
you
the
come here for
clickbait
our
title.
semiconductor takes.
Yeah, yeah. Speaking of a
Uh,
company that we may know a little more about, though, Autodesk earnings, strong growth, bad capital allocation yet again. Companies on the watch list for me. I think I would buy at the right price,
Andrew
but
Anagnost, gotta go. It's time
okay,
for
put in that
Elliot.
product.
It is time for Elliott Management and Paul Singer to step in, take control of the business, send one of those really weirdly worded tweets out from Jesse Cohn's account where he says, I look forward to working with Autodesk. And then suddenly Andrew Anagnost is no longer a CEO in 2 years.
Yeah, make
Maybe
him the
put him,
product guy.
make him the
Product
product
guy.
guy. That is fine. But I saw the chart this morning. The stock-based compensation is ridiculous, and it needs to stop. It's an illness. I think it's a plague in Silicon Valley
Yeah,
or something. I don't know what's going on. I don't know how they've gotten away with it for so long. I don't know why investors just keep letting it go. But
because the business is so good. That's why.
stock-based compensation for them has compounded at 19% a year for the last decade, and I believe that is twice the rate of revenue. Let me double check that. And
Yeah,
that's
so as a
concerning.
percentage of revenue, it's yeah, yeah. I mean, and as a percentage of revenue, pretty deep. I think it's over 10%. Yeah, it's a big expense. They're a bit wasteful for it, but the architecture and construction business, man, that's good, isn't it? Such a, I mean, man, is that a good business? And speaking of an AI beneficiary, I think this is a clear one who has been investing in it for years, as that's going to lead to even more productivity gains for the software, more pricing power in the long run. Yeah, I mean,
Yeah, I've got it
it's a
here.
good business.
It is a great business. It is a great product and set of products. But a concern here, and I think this is fair, revenues have grown at 8.4% over the last 10 years on average annually. Stock-based compensation, 19.5% annually. But okay, this is kind of interesting. Total operating expenses is only up 8.5%. So maybe stock-based compensation as a percentage of operating expenses is just climbing. Maybe they're just reducing the cash compensation to employees.
Yeah, which is fine, but look, the scale, like operating expenses should scale for this business. But maybe there's more cost of revenue in there. Maybe they're hiding cost of revenue in there. I know a lot of companies do that. Market cap, I know we both like this business. Obviously, the price matters. Market cap, according to, it's down 7% today, so I'm not sure the updates for these things. Let me just do a double check here across the board. Yeah, okay. $43.3 billion. They do about $2 billion in cash flow normalized right now. Yeah, as you might know, SBC affects that. What price would you be attracted to buying this in the personal account?
Is Andrew the CEO?
Yeah, nothing's changed.
Well, I own it, and it's just purely out of laziness. I feel like I'm going to sell it, but I'm not going to use cash flow. I'm going to use EBIT. And I would say at mid-teens EBIT multiple.
Okay.
What would you say?
Yeah, it's hard to. I kind of go for like a market cap number just because I know that their potential earnings power is so high, and at the right price, that buyback is going to make a lot of sense. Maybe a market cap of like 30 billion.
That buyback is the most measly
Well,
buyback right now. I know. At the right
but
price,
at the
it
right
would be
price,
helpful. Yeah. But
I know it doesn't go anywhere. And it helped me with a nice viral tweet though,
they've
making a
spent
joke
a
about.
decade buying back stock and it's in the same spot.
I do laugh every conference call. We continue to return cash to shareholders buying back stock, and then look at the chart. Share count hasn't gone anywhere. I guess if they didn't do it, the share count would be going up a lot. But yeah, I mean, great business continues to be on the watch list at the right price. I'm in, but management continues to disappoint. I think that sums it up. But look, AEC revenue growing 17%. It's even accelerating. They have the pricing power. They can raise prices on Revit 5% each year. No one can do anything. No one's gonna do anything because the value they provide is much higher than the price that you pay, especially on the enterprise bundle. And they have all these new products that are succeeding mightily. Yeah, but again, there's multiple things that matter to a stock. It doesn't just matter that revenue is going up and that they have good products. Capital allocation matters. So, yeah.